If you're a seller in Colombia thinking, well, it's still a seller's market, I can price high, this video is for you. Because our fourth quarter data shows that the market is still strong, but it's punishing overpricing harder than it has in years. So let's start with what hasn't changed. Sales are still up 3.9% year over year, and prices are continuing to rise. In fact, the median sales price came in at $284,000, which is up 3.5% from last year. So in our market, we're not seeing a market crash. We're not seeing those crazy declines in prices. The demand still remains. South Carolina has been the number one most moved to state for the last 2 years, and we're expecting strong numbers for 2026 as well. And Colombia is outperforming so many other markets. We remain a very great place to both invest, to purchase, and as our economy still runs strong here in the Columbia area. So when we think about inventory and what type of market we're in, there's a buyer's market and a seller's market. Technically, a balanced market is when we have 4 to 6 months worth of inventory. Less than 4 months worth of inventory, and then we're in a seller's market. More than 6 months, and we're technically in a buyer's market. So that means generally in a seller's market, the sellers have more negotiating power and position. In a buyer's market, the buyers have more negotiation power and position. So what we're seeing is that inventory is slightly up to 2.7 months of supply, and yet even under $750,000, there's still a listing friendly market here in Colombia. If you respect the data and if you respect the pricing of where homes need to be for those buyers. So, what's the truth behind days on market? Well, days on market is how long it takes for a home to sell once it goes active for sale before it gets a contract. So, how many days are buyers looking at it? How many days is it out there available to look at? So, homes did take longer to sell. The median days on market is up to 38 days, which is higher than it was the previous quarter at 29 days. And that's not buyers that are just disappearing and demand going away. That's buyers who are refusing to chase bad pricing from unreasonable sellers. The market didn't slow down, the sellers did. They changed their strategies and said, let's just price crazy high and let the buyers come on. And the buyers said no. So when we look at days on market, demand remains, but the buyers are refusing to be ridiculous with the pricing. So, sellers, here's your pricing wake up call. The number that should stop every seller in their tracks, 45.6%. That's a number of homes that had a price reduction. That's nearly half the market. And when sellers reduce their price, they didn't just lose money, they lost leverage. Those buyers come in there and they see the blood in the water and they say, oh, they've already reduced the price. Let's come in even lower. And when that happens and there's only one buyer at the table and that seller's been sitting there keeping the home clean, making sure the kids are, and the dogs and everything is taken care of each and every day, when their life gets interrupted, all those days on market, that's when the seller starts saying, okay, what's it going to take to finally sell this home? So what's it going to take? Well, it's going to take that equity. The average reduction was 5.3%. So if we're looking at a $100,000 house, that's $5,000. $200,000 house, $10,000. A $500,000 house, that's $25,000. If we're at a million, that's about $50,000. Those sellers are losing in those price reductions, and then the buyers are coming in even lower. They're eventually selling for another 1.5% less in sales price because of those days on market and because those sellers have lost that leverage. And it took them 8.9%, 8.9 times longer to sell when they had those higher days on market and when they were overpriced. So it seems that overpricing is now the norm in our market. When you combine the failed listing numbers and the price reductions, 60% of listings were overpriced at some point in the fourth quarter. That means that only 4 out of 10 sellers actually got it right the first time. That's not a market issue. That's a strategy issue. So now you're thinking, well, it's time for the buyers to jump on in. Are the buyers finally winning? Well, there's some opportunity there. We're going to keep it real though. Only 21.9% of sales included seller concessions. And sellers are still negotiating from strength because of the lack of inventory. The median concession was about $7,000. And the FHA usage rose due to the affordability, as we saw FHA loans having lower interest rates than other loans. So here's my favorite stat. It's the 1 week rule. You're trying to figure out, are we overpriced? You're trying to figure out, am I going to sell? Well, you're going to find out in about 6 days. Homes that sold at or above that list price did so in a median of 6 days. So you'll know within 1 week if your price is right. Price is tested by the market immediately. Silence is, in fact, feedback. So when we zoom out and we're including expired and previously listed homes, the pattern is obvious. Homes that are priced right sold fast and at full price. Homes that chase the market paid for it in time, in money, or maybe even both. Two decisions still make or break a sale: the pricing and the agent.